Here I decided to go long, expecting this to act as an inversion fair value gap. Okay, do we keep this safe? Because on the 5-minute chart, we did dip into here once. So I'm seeing, and it's almost 6:50 AM macro now. Does it want to keep this and move higher? And because on the 1-hour chart, I'm seeing this, so yeah, we shall see. Hey guys, so I'm going to do a trade review for Monday, 8th of June. We got CPI tomorrow. Today we have no news, okay? But looking at the daily chart, yeah, my chart is really in a mess. I really need to clear it. Okay, because last Friday we had a big swing lower. Okay, this is the last Friday candle. So expecting for higher price during Monday. You can see during price reopen right here 7, it started punching higher, all the way higher. Okay, so you can see I have taken 2 trades. Okay, both was a long, but just sadly it did not pan out. Okay, but you know it did. It was doing my break time, and I decided I saw this candle expansion up. That was when I decided to take the trade. Yeah, because London session we've been moving higher, then we did retrace lower, then again after doing all this kind of movement we did all this sell side already, we expanded higher. So and then price was sitting above that BC, so that was why I was seeing for higher price. Okay, you can see what price was doing like that. Okay, but you can see right here only like 705 each spike out, but basically I traded right here. Okay, so the first trade, as you will see in the video, I was saying I want to see price use this as inversion fair gap. It did not. Initially it went up, then it went lower, okay, and stopped me out. I was thinking I want to see this act to be safe, but now looking back, shouldn't. That's what I just think. Okay, because you can see this is like a bull flag, and then it's 6:50 AM macro time. We did a big expansion already. Want to see price really clean out. So I was expecting that 5-minute chart, that 5-minute candle, the 5-minute BC to be a breakaway, but I did not trade it based on a breakaway. Okay, yeah, it was just me trying to be Mr. Perfect. Okay, and you know what, Mr. Perfect has its price. Okay, so right here you can see I was thinking I want to see price act of this 0.25 level and then start moving higher, but you can see price breach for the CE of it, only then it expanded higher. Okay, so it still was a breakaway gap. Okay, but you can see the bodies was actually, the bodies are staying above that, supporting this 5 minute BC. Okay, but I was just wrong. Because why? When price expanded up like that, next time what I will not do is I won't trade. I won't trade based on this. If I'm going to trade based on this, my stop loss will be under here. Okay, expecting it to be a breakaway, expecting the CE to be taken, expecting all these kind of things. But you know, I was just using my phone. That's why one thing I realized, my phone does not give me enough information. That's what I realized. Okay, so here will be have been a 40-point stop loss, but I did not want to risk that much. Okay, so yeah, and then boom, we expanded higher, higher, higher. So look at that expansion. The expansion basically says that I want to go higher. Okay, so yeah, so if we just draw out from the daily candle and just draw out that, okay, right here, okay, the TGIF 25% under right around here. So 25% is here, just eyeballing it. Okay, so that will be 25%, 29229.2. Look at that, we have what? Relative equal highs. Okay, and indeed I was just seeing for price to reach up here, but you can see price expanded way above it. Okay, so here will be the first target, but with this expansion up means it really want to move higher. Okay, so lesson learned, if I'm going to trade based on with my phone like that, like, you know, I wasn't really interested in the market. I was just saying that I want a high price, but you know, it's gonna happen. You're gonna lose in trading. So for this day, right, I took a loss, and I decided to tell myself to stop. Okay, so it's 1.54 and 1.54. There's two trade, so it's 15 handles, a total of 30 points loss. Okay, if I was trading mini, that is a total of $60 micro, sorry. So I'm going to trade it like that, based on that. What I'm going to do, I'm going to stop now, because to be honest, I put this trade, then I went back to work. So I realized that it's different. Like if I were looking at the price, like feeling the price, I would have probably closed my trade earlier, but did not have the luxury to observe it. When price reached here, it should have expanded higher. I saw it around here. Okay, so when it started moving higher, it should have expanded higher, but it didn't. It cleaned out so clean because what? It's Monday and we don't have news. So price will do the most damage it can. And then what? Macro time is when it's sensitive, and always see for price to enter a discount. So let's say this is the most impulse move, okay, to here. Because of that impulse move, right, everyone will chase long, then they will protect their longs here. Raided, boom, then raided so many times, engineered, raided, engineered, raided, engineered, raided. So premium to discount, boom. Okay, so every time when price do this something like that, consolidation, expect that lower portion, expect the console low to be raided first. Look at what I did, perfect. Enters a discount of that impulse move. Enters a discount, only expanded higher. Do we form a low? Yes. Did we deep stop it? Yes. Did we get above it? Yes. And it supported price. Everything was in play. So here, you can see the BC. I did wanted to long here, right here like that. I did wanted to go long. I told myself I've lost 2 trades and I was working. So I decided that, you know, just accept the loss. Take it like what I'm gonna do if it's bigger risk. If it's micros, what I'm gonna do? Stop. You're gonna stop. Okay, so right here it's 18 handle, 18 points. So 18 points. Now you'll be wondering, where was I targeting? Because on the 1 hour chart it's already that close to that highs. Can see right here, you can see price was that close to it during here, but it went lower. So when price was here, I was expecting draw liquidity, submit to higher price. Higher price is right here, so I submitted to that, but it stopped me up prematurely before reaching up. Okay, so now I draw out the dealing range. Like if I'm going to go long, what dealing range? Okay, let me clean out all this first. All these are the notations that I traded during last week. Yeah, and you guys can see that it was a big run, 100 plus handles. You guys can, yeah, if you guys interested, I will post that review also. Okay, so now the dealing range is this. That's the dealing range. And then premium is here, but price expanded way up, so it's reaching up for something. For I would say, then I will use this as a target, as a premium. Okay, so because maybe it can reach for Friday's high here. Why? Because everyone that is short, that is profitable, their stop loss is right there, assuming that they never move their stop loss. Those big fishes, they have their stop loss. Deep pockets, they have their stop loss right there. Okay, so yeah, but now I'm not gonna trade because I accept the loss. But because, you know, the feeling, now I have a feeling, I don't know what. It's because I lost a trade, because I traded doing work and I lost a trade, that makes me uncomfortable. I don't know, so I gotta find it out. But I know I shouldn't trade now. I should not trade when there's emotions, that I can be affected by emotions. I should not trade. Plus I just came back from work, I'm tired, so I'm not gonna trade. You know what, I saw the price, I was seeing for higher price, it just painted out without me because I was trying to be Mr. Perfect. And no, it's because of the condition. Remember, so next time when you see an expansion, I always expect movement low first. Let it do a stop rate, and during the macro times, it will want to do a stop rate. Just wait for it. You want to do an obvious stop rate. You want to see bodies closing below a low, just like that. That's the obvious stop rate. And then we got BCs right here. Boom. After it did this kind of movement, only then you trust it. Okay, because this is considered VR, not the start of the move. If it's the start of the move, yeah, why not? But it's not. It's like the second stage of distribution. So expect more deeper retracement. Okay? Expect a body closing like that. Okay, and then what? The CE was holding price. It formed a low there. When it formed a low there, then remember, after bodies close, after that it formed a low, then you can trust that low to stay intact. So I can trust that low stay intact. Let's say this low forms, I can go long based on here. More aggressive longs. What is the more aggressive longs? Based on this. Like just in case it spike up, oh, you know, let's say I traded based on this. This is the first position in, okay, this is the fact that I'm trusting this low to not be broken. That is the criteria. So I'll go long, build my position as long as that low is not broken. So how? It when first on this candle, right on this candle, going to long one, then when it retrace down into the BC, long another time. So two position in, and not afraid of getting stop out. Why? The stop loss protect me. The stop loss will protect me, and I'm just trading based on risk. Okay. And look at it. This CB, it helped what? It helped the bodies. And then we want to wait for expansion up. Boom, expansion up, and expanded way up. Using the old new week opening gap, expanded so high. Okay, when this opens like that, definitely first partial. Just take first partial here. But when after it expanded up like that, okay, after this expansion, this few expansion, stop loss throw to right here, risk free, and just let it ride. See whether you want to ride. You want to see expansion part is high. Did you get it? We get it. Big expansion. Okay, so that's it for this trade review. I'm not going to trade. Just going to look into myself. Because what? You doing this trading, it's about managing your loss. That's what I realized. You know, like it's about being probability. I lose today, it's fine. Maybe because of the big trade that I won last week, that led me, I'll believe that led me to think like that. That led me to have this feeling that I cannot lose. I'm in my equity high. Like you can see, it's been $55 now. It's 255 to 278 already. So I grew it by $23 already. But along the way, I did lose a lot, and there's a lot of times I did the wrong things. So now I'm just gonna keep on doing the right things. Okay. I realized looking at the data, minimizing my losses. I mean, like I do have data for my trading futures and stuff, but this just made me realize, trading this account size made me realize that I wasn't really comfortable with micros yet. The risk that I'm risking, $20-$30 a trade. Okay, I wasn't really comfortable with that risk. I'm honest here. When I shifted to this, I started from like 0.01, trading not one trading 1 cent, 2 cent, 3 cent, 10 cents a trade. And now I decided that it's not doing anything, because you when trade that small, I got like 100 points run, but the amount is insignificant. Okay, in the end, trading is about earning money. So that's why I increased the risk to 0.1. Now it's trading 10 cents per point, and I fix it. 10 cents is my smallest position. Okay, and then I'll slowly grow. What the challenge is $50, profit $50. I can add another $100 into this account, and then the risk can increase 0.2, or I'll make it to 0.15, and then I can close partial 0.05 partial, something like that. Okay, no, let's just make it 0.2. Let's really jump to 0.2. No, let's make it 0.15. Okay, yeah, just make it 0.15. Let's say that will be after I earn $50. And yeah, if I earn $50 means what? I've grew this account by 20%, right? Let's do the math. 50 divided by 5. Yeah, I've grown the account to 20%. Okay, so doesn't matter the amount, because this is just predicting price action. And as I get comfortable, as the risk increase, as my equity increase, I will increase the position size and keep on doing the same thing. Okay, so the same thing is what, when I lose, I'm going to stop now. I am going to keep the wound small, let it heal, let it still be able to heal, not take a lot of time. Mental capital, just fix it back. Okay, that's what I'm seeing. Okay, so I'm just going to keep doing the right thing. So yeah, indeed, I'm in my new equity high. Okay, if based on percentage wise, I have increased this account size by 10%. It's quite phenomenal for me. Never once I done that. And trading so small size. Okay, like risking $5 per trade, that's like 2%, maximum 2%, 2%, and I've grown it to 10%. Wow, I think, yeah. So I'm going to stop trading today, and I'm viewing my wins as extra losses. Like, I get to lose more now because my equity has increased. As long as it's more than my initial capital size, $255, that is profit. And that's how I view it. And I'm not going to simply gamble through. No, I'm not going to do that. Okay, so if this trade painted out, you can see right here it will have offered me. So let's say if I take right here that 1 hour high, which I would have expected expansion up. Okay, so 3 12, so here will have offered me 55 points already. Why not, man? 55 points, just take a profit, you know. So I'll have 55 points here, and that will be enough for the day. So let's say 0.02 positions was in here. 0.2 positions, sorry. So let's say I traded based on here. Okay, because the stop loss is small, it's just 12 point stop loss. So 12 point stop loss. So 12 point stop loss, that's trusting the fact that bodies close below a low and then draw out that low. Okay, that low right there. The low is right at on that 0.25 5-minute BC level. Okay, that is what signaling bullishness. Okay, and then if let's say we pull to the right, do we have an inversion failure gap? Oh, now I'm seeing what ICT meant. Okay, you can see this CB, it was not used, right? This CB was not used. In fact, because price was signaling bearishness, that's why it did not use. But look at what price did. That's why, because it wasn't used, price sinks back into it. Wow, beautiful. Look, it formed a low right there. I don't have to trade that, but that can be information. When we formed that low, we did a stop right here. Boom, went higher. Okay, so that's it for this trade review. Good job, and then a great job stopping my losses, taking it as a 30 points loss, which is, if it's a micro, is $60, or if one day I scale up to trading $1 per point is $30. That's enough. Take the loss, sleep over it, next. Okay, all it matters is, you see, I did expected a run higher, but I did not expect a big up run during pre-market. But generally doing Mondays on CPI weeks, I still always say pre-market trades will be very nice, and look at it, it's very nice. Okay, but let's look at London session, and then I'll stop this. Maybe I want to see what we have on London. Okay, so London we'll use Asian range because Sunday we did pop higher, right? Okay, so right here, Monday 12 AM. Okay, so Monday 12 AM, I will use the new week opening gap. Where is it? Okay, new week opening is right below here. price this what? Price did expanded higher during Sunday, which is normal. It will do so. Okay, then we got what? Asian range low. Okay, so I will be seeing for higher price. So what I'll do? So during London is considered as the second stage of distribution. Okay, so just draw this fib that expecting it to not be broken to here. London always have deep retracements, so I'll just use that full range. Okay, let's just make it 15 minutes one. I want to use the full range. Okay, yeah, that's the full range. So you can see what price did. In a discount, what we have? We have this low. So London, see for this low to be killed. Okay, because Asian range we move up, we go down, they continue move up. Everyone will see it as a strong support. Oh, and its previous week low. Wow. Now my previous week low, that was my previous week low. Okay, so here. So this is sell side, because everyone will be seeing this. Okay, all the sell sides that are being choked, they will be choked right there. Most will be choked. Okay, so now let's drop to, now we got the bring time, and boom, 12 a.m. Can see 12 a.m. Monday sinks lower. That is nice. That's what you want to see. Asian range low get raided. Boom, raided. Did we get above it? Yeah, we did get above it. So 2:30. Okay, 2:30. Boom, we went up higher. So 3 a.m. 2:50 a.m. Okay, so when after this low is raided, wait for 15 minutes to form a low. Okay, always 15 minutes form a low. Okay, after 15 minutes form that low, you trust that low. Okay, so now 15 minutes also have the what? A very nice, this is inversion failure gap. Very nice one. Okay, so this will be 15 minutes. Okay, so there's no need for price to break any lows for Sunday. Okay, now if I bring this low, I'll say this low is quite influential. Okay, let's make it straight. Okay, so this is PM session lows, previous Friday PM session lows. Okay, and we do have this CB right here. This CB right here, that's a balanced price range. You can see price was supported off it because it's balanced. Wow, now I see so much. Oh, what ICT say, when you see this, then we got a small number of candles and we go up, everyone is trapped. What? Everyone is trapped longs there. The shorts are all trapped. Okay, which means what? Everyone that shorted based on here, with this reversal up, people will trade, people will go and buy, and they are trapped there. And you want to see price return to it. Did it return to it? It hasn't done it. So I'll look it at Tuesday, or down the week, whether we reach it or not. Okay, but back to this. See price touch 15 minutes inversion failure gap once more. Time 2:45. Okay, so now bring it in 2:30, then 2:50 a.m. macro. We started pumping higher, really higher. Okay, 2:30 we did have a BC right here, but price basically is entering this. Okay, so Okay, 2 a.m. we did expanded up, went lower. Okay, then we got new day opening gaps, we got old new week opening gap, but basically at this point just see for higher price. So right here 250 AM macro, we expanded higher, but really ugly here, really ugly here. So now we just bring in the context, like you can see how you want to see this act as well, breakaway gap. Why breakaway? Because we want to see price breakaway from this lower 50-minute inversion gap, right? Yep. So we want to see price breakaway from it. So treat this as a, you want to see this ideally stay empty. So you want to see this ideally stay empty, okay? And indeed it became empty, it was empty. So you trade based on what? What do we have? Order block. So this can be an order block long. Don't expect a fair gap trade here. Expect a breakaway gap trade. Okay, so I'll just delete this. Just going long based on this order block. Let's use the high. Flow near. Right here. That will be the stop loss. That's like a 28 point stop loss. Okay, 28 point stop loss. That is a good trade. I will risk. Okay, but let's see on the 5-minute chart. Let's say just trade based on 5-minute chart and not go down the 1-minute chart. 2:30 AM. It did enter this small BC. Okay. Most importantly, what this? So, okay, so for this is the start of the move. Expect what? A breaker, high, break. Okay, then you want to see what? This is the breaker candle. See on the 50-minute chart. Okay, the breaker candle. So your London session breaker will be nice. But because we do have a breaker right here, and then inversion failure gaps. If when there's a breaker in inversion failure gap, expect the inversion failure gap to be reached. That's what I always say. And boom, we went up. Or just see where I will enter on the 5-minute. Okay, so okay, so 2:30 right here. So let's say this series kind of candles is the order block. Okay, so I'll just draw out this, just trade based on order block. Okay, that's it, easy. Okay, and you want to see price stay in the upper portion. It did. You can see what it did. It did stay in the upper quadrant, not even reaching for mean threshold of the order block. Okay, so what we can expect? We can expect this to be traded too, because it's in the, change the color. So that can be expected to be traded to, and price did traded to it nicely. Right here, bodies leaving it empty, and then because if you look at the smaller dealing range, we entered a discount. There's a BC, so there's a BC, there's TCV, and it's in the upper is above the mean threshold. So it'll be a nice trade, and we have down close candle here right at the mean threshold. That means what? That will be a valid mean threshold that you don't want to see price reached. But you can see price reach for what? This order block, it reached for this, but then open, close above it. That's what I want to see. Okay, so that's it for this trade review. And then the whole trade can be held just closing at Monday high. That can be a trade by itself. Okay, but let's say I traded this, even here will be enough. Here will offer 100 points, at least 100 points. Then here, new opening gap, but offered 140 points. Okay, so London session high, that can be a target. So yeah, this trade will have been a monster.